So please join us and today while we embark on a journey towards home ownership. So pour yourself a drink and let's get started on today's conversation. And today we'll be discussing one of the most important steps, which is credit. And we have Chris Osterlin, which is a mortgage specialist who's been guiding me through a ton of mortgage trials and tribulations, which I love about Chris, and that's why it's very good that he's on this call. And we have a special guest who's on this call that is a credit expert. So he's going to be talking to you about the ins and out about credit. But first, we're going to hear from from Chris, but don't be afraid to throw questions in the chat because it's not going to disturb us. And we want to make sure that you get it off right away. So let's jump right into it. So I'm going to introduce Chris as we are going.
Awesome. Thanks, man. I hope you can hear me okay. Working through the tech stuff, making sure we're good. You got me live, Isaiah?
Yes, sir.
Beautiful, man. So one of the biggest things that we get a lot when people are trying to buy a house is what steps should we take? What should we do to prepare? And one of the things that we do first is we always talk about credit, because credit is one of the foundational pieces that you have to have in place in order to be able to borrow money at any point, especially when you're looking to borrow a lot of money and purchase a new house, right? And so we want to go through what some of the steps are you need to take in order to get ready to buy. But the primary purpose of us getting together tonight was really just have a beverage and sit down and talk a little bit about credit and focus primarily on that point. So I've been at Rocket Mortgage for just shy of 17 years. I have done a multitude of different things for the company in different areas of finance. And so for me, this is one of the most common topics that I've talked with amongst pretty much every client I've ever worked with. So what are the steps to buying a house? We'll start there. We know credit is a big step. From there, you need to start looking for a great referral for a realtor, which I usually, if anybody's looking anywhere in Eastern Pennsylvania, they're working with Isaiah. So you have to have you have the great real estate partner, but you really have to start with getting yourself approved with a lender even before you get to that stage. So you can have the conversation about what a loan would look like, what you can afford, what your payment's going to be, how much cash do you need, what position is your credit in, which is what we're talking about today. So starting at that point, step A, right, in the A through Z. And then once you get to that point and you get your approval set up, you know what you're looking at that point, you're going to start engaging your real estate agent, having a great conversation about what that price range and what those things look like in your market. And that way you can be more prepared to start making offers. So, following those steps, starting with making the decision, having a conversation with a lender, somebody that you can trust, engaging a trusted real estate agent, which your lender can probably partner you with somebody, and then working together with them as a team to make sure that the transaction is smooth and it feels good. That's the right way to do it.
Okay, well, Chris, I know we're not trying to take too much time of our people and our viewers. So I feel like it's time for us to introduce the man of the hour and the person that everybody came to see and the people that, we want to hear from. It's time for us to introduce the man with the best credit guy I know. Hey.
What's going on, gentlemen?
There he is. Looks like he might have just trimmed up a little bit and got a clean shave today, too. Look at this guy.
I did. Good. I was scruffy last night, and I told my wife I have something really, really important to do tomorrow evening, and she's like, well, I'm happy you get cleaned up for them, but not for me. But that's another story for another day. But I'm extremely honored to be in front of the group today. My name is Abe Yehi. I am a director on the credit team at Rocket Mortgage. I've been at Rocket Mortgage for 13 years, and I have been beyond blessed. I call it the 3 B's, been beyond blessed to be a part of this organization on the credit team my entire career. And 8 years out of that time, I've actually been a director also. So for the last 13 years of my life, I've been doing things that I'm extremely passionate about every single day. Credit and leadership. That's a little bit about me and my professional career.
Appreciate it, man. We're going to talk about the big building blocks of qualifying for a loan. And we know credit is one of those huge building blocks. It's like a pillar, right? And in order to stand a house up, you need pillars. You got income, you got the type of property, you got the assets that you need. And one of the big important pieces, that last one, credit. If you knock out one of those pillars, your house falls down, right? So you got to have all 4 of them, pun 100% intended. So we got to talk a little bit about credit. And so with credit, when it comes to building credit and all that kind of stuff, like it's a mystery for a lot of people, man. So I know we're going to start with the basics, kind of work all our way through all the different categories. Can you define credit for me? Can you like talk a little bit about what credit is just at the basic level so people kind of get an idea of what credit is if they're not really sure?
Absolutely. So let's go to like the Webster Dictionary definition of credit. It is the ability to obtain goods, money, or services in return for a promise to pay at a later time. That's like the definition of credit and how the credit bureaus evaluate your credit score, because that's super important as well, right? I want people to think of their credit report is like a report card. And the credit bureaus, they're like at your buying habits and things like that and seeing what you're doing with that. And they're going to evaluate your score. Your credit scores are a reflection of to maintain healthy debt and be overall responsible consumers. That's how you're going to get a good grade on things.
That's awesome, man. How is credit evaluated? So I know you wanted to talk a little bit about what we offer at Rocket. So for everybody knows, Rocket Mortgage is where Abe and I hang our hats, hang our licenses, hang our badges. And so we have something called Credit Upgrade. Can you give us like a brief overview of what it is and who it's designed to help specifically?
Absolutely. So like I said, I've been part of the credit team, and our credit team here is called Credit Upgrade. And what we do is we help our clients improve their credit score for the purpose of a home loan, either purchasing a home, trying to refinance, trying to get a home equity line. We improve their score and consult them. This isn't credit repair. We are credit consultation, and we consult our clients on exactly what they need to do to improve the credit score. And it could be opening up a credit card. It could be getting a late remove, a collection deleted. We evaluate their credit and tell them exactly what's impacting your credit scores. And we deliver that customized game plan to our clients. We follow up, You know what's the best part about this? It's complimentary. Here at Rocket Mortgages is complimentary for our clients to help consult them on what they need to do to improve their credit score for a home loan. It's awesome.
There we go. I think there's an airplane analogy you like to use.
I wanted to bring that up. You see, you cut me off. I was about to just go right. I had to get a sip.
That's my favorite thing when I hear it. I love it.
Am I allowed to have a sip too? Can I just take a break, get a sip going? All right. So I love analogies. I'm big on analogies, right? And I look at Credit Upgrade and I think about an airplane, right? And I want you to think about not a person that wants to take a vacation, that has already booked a vacation, right? And they got that plane ticket and they're going up to the gate and they get checked in, right? And guess what? Those people that are sitting in economy or coach, they get moved up to business class. And those people that are sitting up in business class, they get upgraded to first class. And that's what we do here at Rocket Mortgage and Credit Upgrade. We upgrade our clients. They're already on the plane. What does that mean? Them sitting on the plane, probably sitting a little bit, maybe in, the 34th, 35th row by the restroom. They're sitting down, enjoying the flight, and they're like, how can I get up to business class? And we coach them. We let them know exactly what they need to do. And now they're sitting in business. They're like, wow, man, look at first class. They get a couple better snacks. Ooh, they get to drink a few more things. And how could I upgrade to first class? And that's what we help our clients do. We help them upgrade their credit to increase their chances on converting a home loan. And that's awesome about it.
Yeah. So this is, so there's plenty of resources out there. And the idea of this, a lot of this is to help people who aren't quite ready to have the plane ticket yet. Maybe the scores are 400s or low 500s. There's some work to be done. There's still a lot of things to do. Once you get in the 580 plus range on credit, now you're starting to work towards getting approved for more mortgage options, right? For your people out there who got some more work to do. They're not quite ready to buy the plane ticket, but they know they need help. That's what this is for. Once we get them to the point where they got credit where they can buy the plane ticket, they're at that 580, rough 580 range, and they got the credit to buy the ticket, right? Now we're here to get them from that 580 34th row to like at least Delta Comfort Plus, right? So that's when I start to tap Abe in and I say, hey, we got somebody who either qualifies or they're really close. And that's when I tap you in, because we want to either get them from close to qualifying or from qualifying to qualifying for something better. Or even if somebody's got a 720 credit score and we're like, man, a couple small moves, we could get you to 760 and get you up to that first class approval, get you that first class mortgage, right? The best rates, the best terms, you get everything, right? That's what Abe and the team are there for. They're not there to help from day one, where we need a lot of work, but once we're in the airport and we're ready to take a flight, he's there to upgrade you into getting to a better class of seat, comfort plus, business, first class, right? Zay just loves being on mute, man. He's just like all this great stuff.
All right. So I heard you say something about first class, and sorry, I'm like doing all the background stuff and like checking out the chat and things like that. But somebody wrote in the comments, they want to know like, what's the benefit? Like, if you're at a 580, like, is there a lot of programs out there that benefit them for a 580 for a down payment assistance, or is it less programs at a 580 rather than a 660 and a 720?
That's awesome. That's a great question. I know we budgeted time kind of right in here for some questions too, which is perfect. So when it comes to down payment assistance, you have stuff at the state level. You have third-party companies like, nonprofits and all kinds of different places that can offer different grant programs. If you're just talking straight mainstream stuff, when your scores are a little bit lower, the type of loan that you're primarily able to get into is usually a government loan. A lot of times it's FHA or VA, but FHA is one of the most common first-time buyer programs that's used in the country. FHA loans are used a ton. And they're great loans. So to say usually when you have a lower score, you go FHA, I don't want that to diminish the benefits of FHA, because FHA is a great program. It just works very well for folks who don't have a ton of money, or they just don't have the greatest credit score. And when you're in that, 580, 600, 620 range, you're going to have to find down payment assistance programs that focus, a lot on FHA, and you don't get to take advantage of some of them that exist exclusively for what you call conventional loans, a different type of loan. In that type of loan, in the example in the question, the 660 credit score, the 680 credit score, the 700 credit score. For example, we have programs that give you up to a 2% grant, but it's a conventional loan, right? Okay. And so if you're at a 620 or a 610 or a 580, those are probably not going to be options for you. So yeah, you probably want to get yourself into that 660, 680, 700 range. That way you have a plethora of options. You have FHA, you have down payment assistance that focuses primarily on those, but you may also start to open up some other conventional loan options, which a lot of those grants and programs that we offer, you don't have to pay back. Some of the FHA ones, a lot of them, they're third-party grants, and they put a lien on the house. Sometimes you get into the better credit. In general, you get into the better products.
100%. Okay, so I'm going to transition back to Abe. I mean, that was a great question. We're going to kind of wrap up the questions that we're getting in right now, and we're going to jump into our next segment, which is square one, establishing your credit. So I'm gonna put Abe back on the front runner and let him start talking.
Awesome. So I think step one is for consumers when they have no score and they need to establish their credit. What is the best way to establish your credit? What is the best way to build your credit score? And there's two simple ways. Option A, option B, I like to say. I'll say option A, option 1A, right? The first is go out there and get yourself a secured credit card. Now, when you don't have a credit score, it's not like you could go out there and get the fancy Discover or American Express with all these rewards. A secured credit card is where you pay the credit card company to secure your funds so they approve you for that card. It's a great way to build and establish your credit initially. Get yourself a secured credit card. Another way to establish your credit, I like this way too, it's kind of cool, right? Is where if you have a friend, a family member, a spouse that you trust, I'm going to emphasize that you trust, where they are financially responsible. And what do I mean by financially responsible? They could add you onto one of their authorized user cards, such as, hey, I have a Capital One credit card that I've had established for 20 years. My utilization is low. Utilization means your limit to balance ratio. My utilization is low. I've paid it on time every single month, and I have 20 years of history on that credit card. And you know what I'm going to do for my buddy Chris? I'm going to add him on an authorized user because he doesn't have any credit. He doesn't
what a great
believe in
dude.
credit. And you know what? He gets the hold on, get on my back, because you get the piggyback off of all my good credit that I've been building for 20 years. And after that card reports, he gets 20 years of history. He gets that low utilization that I have.
Whoa. So
Whoa,
my
whoa, whoa.
17, 18-year-old kid can have a 20-year history credit card?
He's not even 20.
That seems unfair.
I'm going to give you my line. You ready for my line? Credit is an art, not a science. And sometimes things, they're not logical, but that's how credit works. So now all of a sudden, Chris, you were chilling, laying back, paying cash for everything. And now you just get to piggyback off of my 20 years of history. And when that Capital One credit card reports to the credit bureaus, you're probably going to have about a 720 score like that.
Yep.
Great way to establish your credit. Getting added as an authorized user, but make sure, like I stated, the individual you're getting added for, you trust. Financially trust, and make sure they mark off all those things: low utilization, several years of history length, and it's going to be awesome.
That's awesome, man. I mean, we've literally taken young kids. I got an intern. Guy started as an intern with one of my partners out in Vegas, and we got this young kid, built a credit score within a couple months, and he bought his first house. I had another client who was in her 60s, paid cash for everything. Same thing. We ended up getting her a house within 3 months, from a 0 score to owning a home in 3 months. So if you have no score, there's nothing bad on there. There's nothing negative, but it's 0 because you got nothing. You can get a score and you can build one. It is possible.
100%. So, Abe, I know we start about square one, but I know some like things that we need to define and things that we need to fix some like terminology. And a lot of people don't know, I know for one, I didn't know about revolving and installment loans and anything like that until I actually talked to you, and me and you had to sit down. So can you give the viewers a little breakdown of what installment and revolving means?
Absolutely. So I'm going to inverse it, right? It says revolving versus installment, and I'm going to say installment versus revolving. So an installment debt, I want to go over some examples of an installment debt. That would be a mortgage. That would be an auto loan. That would be a student loan. So an installment debt is you go to a creditor and you're getting a loan and you're agreeing to have them give you this loan for a certain term. So let's just say, for the sake of this call, 120 months. 120 months, a 10-year term on that loan. And every single month, you have a set amount that you're going to pay every single month. $250 for a 10-year term. That's what you pay this company. So you pay them in the installment debt, month 1, month 2, 3, 4, 5. I'm not going to get up to 120, but 120 month you pay your installment debt. That loan is done. It is closed out. It is zeroed out. That's an example of an installment debt. And installment debts are good, but after you pay that loan off, it's gone. It's done with. I like to talk about revolving debt. When I think of revolving debt, I think of like a revolving door. Revolving door is like nonstop. You keep going and going and going, right? A revolving debt, and that's what we talked about, how you can establish and manage your credit, would be like a credit card, because every single month you pay on that loan to that creditor, it never closes. You don't want to close out any credit cards. We'll get into that a little bit later. But you continue to pay on that credit card every single month. Now, how do you pay it, right? I talked about establishing the credit. We talked about revolving or installment debts, a little bit about revolving debts. I want to tell you how to manage your revolving debt credit cards, because there is a method to the madness, right? When the credit bureaus, remember we talked about evaluating your credit report, right? And they're scoring you and they're getting your report card and they're going to grade you out, Zay, right? They're saying, man, Zay's got this $10,000 Discover credit card, right?
Yeah.
And he went a little bit spending happy this month. He's carrying a $9,872 balance on that credit card. Zay went all out. Bought some new tires for the car. He bought an outdoor patio set. Let me go into shoes. So I'm going to talk about shoes, right? So I knew today was going to be a special day. So I brought out my top 3 pair of shoes of all time. It's a Jordan 4.
Fire.
Yes, right? So Zay went a little spending happy that month. And the bureaus are looking at his credit report and saying, woo, Zay, you got this credit card maxed out. You're looking at a D- at best with this, right? So the bare minimum that the credit bureaus want to see on this, on your credit card utilization is 50%. I call it the 50-30-10 rule. 50% of the limit to balance. So Zay, let's get that credit card down to at least $5,000. That's the 50% threshold.
Yeah.
Then we go to 30%. That'd be $3,000. Then we go to 10%. That'd be $1,000. See how I did that? I can't get too much lower, right? But under 10% is where you're going to maximize your credit score. Now, I said under 10%. We are not. I'm going to repeat this. We are not going to pay credit cards off to zero. Why?
Wait, what?
The credit bureaus don't like it's crazy. So the way they evaluate this, so you have used your credit card 72 times throughout the month, and you get your bill and you pay it off to zero. And they report to the credit bureaus with a zero balance. That looks like a closed out account. There's no activity on the file. And all that good stuff that you bought and all that good payment history that you have, it's showing that it looks like a closed account. So
wait,
that's
so
why
you're telling me all this time I've been paying cards off to zero. It's actually a negative, not a positive?
it is not. I want to maximize your points, Zay. I want you to get the highest score possible. You want to know why? Because I want when you go out and you go look for that dream home, you qualify for the best loan program possible. I want your scores to be in those high 700s. And that's how you're going to maximize your points. You need to keep some type of balance under 10% on that credit card so that activity is being shown.
So so one thing that I've learned over the years too, and we've talked about this before, the credit card companies don't report necessarily the same time based on your billing cycle or based on when you, I mean, they just report. They just report your balance when they report your balance. And every company usually has a date that they do it, but they all don't coincide the exact same amount of time when your bill is due. So in theory, Abe, right, you could, if you only had one credit card, I have two, but if you had a low number of credit cards, one of them I have had for about 20 years, so my son's going to get a nice bump on his score.
Don't close it.
I would never, ever.
Okay. All right.
You know I know that.
Okay.
But,
all right, sure.
But in theory, somebody could find out what day they report to the bureaus.
Okay.
And they could just always make sure they pay it down by that date, at least maybe a few days before that date. So even if they like had to add a deck to their house or redo the siding, or like, man, I got this $10,000 credit card, I got to put like $8,000 on it, but Abe said I can't put more than 4 on it, and I don't know how I'm going to pay. I mean, I got some money, but I'm looking to float. In theory, somebody could put money on there, but what they would want to do, correct me if I'm wrong, find out what date they report and make sure maybe at least a week or so before that, they just pay it down to get it down before it reports, because it's not going to be when their billing cycle ends. Am I right?
I'm going to make it crystal clear for all of us. So I met Zay. I think what's it been? It's been like 2 or 3 weeks, right? Mm-hmm. I've been doing this for 13 years, and Zay hit me with one of the best terminologies ever. I don't like the word manipulate. I think manipulate is like not a good word. So I'm talking to Zay. We're getting to know each other. He's like, I got a word for you. I'm like, what is it? Hit me with it. He's like, finesse. I'm like, oh man, Zay, that's like your word. So when I coin that word, when I use that word, I always put like Zay, copyright Zay. So there's a way where we can finesse the credit bureaus and your credit cards. And let's just talk about it like this. You have a credit card where they're reporting their information to the credit bureaus on the 15th of every month. Let's just use the 15th for the sake of this combo. And what you want to do is you want to say finesse it, okay? So 7 days before it reports 15th, let's do a little math, boom, 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 8th, boom. The 8th, you're paying it off under 10%. And you're waiting 2 days after. So 15th it reports, 2 days after is the 17th. I am not advising anyone to ever do this, but if you need to, but if something comes up, but if there's an emergency in life, and if on the 17th, if they report on the 15th, you max out that credit card, the bureaus are never going to know. I'm serious. We'll never know your credit card is maxed out because on the 15th, your balance was under 10%. So that's what the bureaus are going to see as your information.
I feel like that's like
no,
a cheat code
that's a finesse.
Yeah,
Right.
that's a
You're
finesse.
definitely right.
And really, people are only buying cars or houses or doing things like that maybe a time or two a year, most of the time, unless it's like a refi. Boom, you're like, oh, shoot, I refi 3 months. Oh, shoot, I'm going to refi again. But, most of the time, when these big life events are coming up. So when you're going to use your credit and you want to maximize it, these are ways you could be strategic to finesse the score to just make sure that when you go to apply for credit, you look like an all-star.
Okay. Okay. So, it was take a sip time and it's take a sip to drink. And we got some questions that's coming in. So one of the questions was like, what are the factors that affect your credit the most?
I love that question. It's a great question. And I want everyone to know that their credit report is a reflection of paying their debt back, right? To the creditors, right? Every single person is going to have their own report card on what's good and what's bad. They're called score factors. So the bureaus kind of almost give us the cheat code. We used that term earlier. Cheat code on what's impacting your score. One of the number one things that impact your score, we talked about the utilization, proportion of balance ratio is how they identify it from the credit bureau standpoint, right? Another thing, and I don't know, you want to jump ahead, Zay? We can jump ahead. Maybe we will, or maybe we'll answer this question in maybe about 2.4 minutes because we're going to talk about derogatory and negative accounts. And those are other things that can impact your score. But not having credit, we talked about that. We talked about establishing credit. We talked about the difference between revolving and installment and how to manage your installment debt, because that's another thing too that the credit bureaus could use to help or hurt your score. I know we're gonna jump ahead, let's just jump ahead. You know what? Let's have some fun. We're gonna talk about derogatory accounts. Now, what is considered a derogatory? Derogatory, it's not a good word. It's negative accounts, right? So, what are some forms of negative accounts that could affect your credit score? It could be a collection. So, a collection account is where when you are delinquent on a debt and the creditor is hounding you to collect the debt, right? And you do not pay them, they're like, man, Zay is not being financially responsible. And we are not collecting this debt for him, right? So I heard about this Chris collection company, and Chris, I'm trying to get this money from this guy, Zay, and he isn't paying me. And it's $1,000. So what I'm going to do is you're going to buy this debt and you go chase him down. Pennies on the dollar they pay for some of these accounts, right? Pennies on the dollar. Now it's not my problem anymore. Chris paid me pennies on the dollar because I wasn't collecting anything from Zay. And now he's going to go hound Zay. That's a negative thing that could impact your credit score. Now let's just say, you know what? I'm going to keep hounding Zay. That's what's called a charge-off. So we do not sell that debt, that negative derogatory debt, to a third-party collection company. So I'm just going to keep hounding Zay. And you know what? In the meantime, Zay, what I'm going to do to you because you're not paying me, I'm going to continuously report that charged-off account, past due, negative and derogatory to the credit bureaus, and your scores are just going to keep going down and down. It's another way that your scores can be impacted. And the last way, I'll say that, right? Late payments. This is a myth that people say. Your credit card bill is due on the 10th of the month. And Chris, he was out late night on the 10th, and he forgot to pay his bill. And the 11th comes, probably wakes up around noon, 1 o'clock. He's like, oh, man, that was a great night. We had some great. Oh, my gosh. My credit card bill was due on the 10th, and I forgot to pay my bill. So he goes in. He looks at his Discover account. He's got a $35 late fee charge. He's like, man, I got to pay this right away. Man, this hurt my credit report. I don't know what to do. I should probably call Abe because he knows a lot about credit, right? And he does not need to worry. Why? Yes, you did accrue a $35 charge. That again, ladies and gentlemen. Over 30 days late, They report the information to the bureau. So if you're 28 days late, you're 20 days late, you're 15 days late, the bureaus are not, it doesn't negatively impact your score. Once you're over that 30, that's another thing that could negatively impact your score.
So I have one for you. It was a question that I got today while I was on the phone, and I just want to ask this while you're on the phone, while you're on a call. What about medical bills? Because a lot of people think that
medical bills is a fun one. I'm going to have some fun with this one. You ready?
Yeah.
Okay.
Okay.
Yeah, I'm ready.
I
Threaten me with a good time. Let's go.
Oh, let's do it. So we're going to go back to July of 2022.
Okay.
And what happened was there was a law that was passed with legislation and the credit bureaus and all of this fun stuff that said anyone that accrues a medical bill of under $500 does not report to the credit bureaus. So this came out and I'm like, there's no way this is real. There's no way. So I was calling up some clients, right? I'm like, all right, hey, listen, this thing all passed. There's a law here. You had a $400 medical bill on your collection. That was 2 months ago. I want to update your credit report and see if that's off there. And like that, it was off there. Like that, they increased 100 points. Like that. And then you know what they said? They're like, I'm going to double down. So legislation's like, I'm going to double down on this and say, hey, if you have a medical bill over $500, I'm going to report it to the credit bureaus. I'm going to report that negative and derogatory mark to the credit bureaus. But there's a caveat. If you pay that medical bill, we will wipe it off your credit report like it never existed. You never had it. And we have seen clients scores increase by 50, 100, 120 points just by paying a medical bill. They didn't have to get Chris Collection Company to agree to remove or delete it. And we'll get into that when we go into derogatory marks and how to properly handle those, right? But just by paying your medical bills, they are completely off your report like they were never there. And we see scores skyrocket.
Yeah. It doesn't happen with any other type of account without some haggling, but medical now, it's the first go-to. You got a couple medical issues, it happens. And that's why the legislation went through, because I mean, stuff happens. Sometimes, you know, you get hit with stuff in life and you got to go have procedures done. And sometimes people either don't have insurance or their copays are super high and, you know, you haven't met your minimum deductible for the year yet. And, you know, now you end up getting hit with a bill that's $1,000, $2,000. And if you're, kind of average American making, 18, 20, 22, 24 bucks an hour, and you get hit with a bill that's $1,000, $2,000, you're like, I don't know, $2,000 just sitting around to just pay this. And if I do, I can't give it to you because what if something else happens? What's the worst you're going to do? Report on my credit. But if I give it to you and I can't, I'm really hurt and I can't buy food, that's a bigger problem. So that's why this bill passed. And that's why it makes so much sense for them to have done it, because medical happens. Sometimes you can't really help what happens. And those bills that result from it really hurt people. But now you got an easy resolution. If you can negotiate payoffs of those or pay over time to get them to zero, that's a great place to start for sure. Huge success with those.
To me, that sounds like a cheat code. I mean, like all this information that y'all are giving me, I feel like my credit should be in the 850s. Like, I don't know if I've ever seen a 900, but I feel like I should get that 900 eventually. You know, with all these tips and secrets that y'all are giving, and y'all are providing gems right now. And our viewers are actually.
You could have a 900. You'd be the only one. You would be, if anybody deserved it, it would be you.
Listen, don't give me a 900. I don't know what I'd do. You know, I might be buying like condos and yachts and all types of stuff, you know.
You'd be buying flip houses, man, but that's a topic for another cocktail hour.
We'll jump into that. But I know you said something that we're going to jump into derogatory, and I'm sorry that we're getting all these questions in, and I'm just trying to get them answered as quick as possible, but also get the viewers something to look at and things like that, and also get their questions answered, you know. But let's talk about those derogatory remarks. What are those?
Yep, absolutely. So we touched on some of the derogatory marks. We touched on late payments, and we know the rule. The late payment only appears on your credit report once it's over that 30-day threshold, but that's a derogatory mark. A collection where we were selling it off to Chris Collection Company, that's a derogatory mark. A charge-off account is a derogatory mark. And people think, oh man, I got this collection on my credit report. I got a charge-off. I got a late. I'm never going to be able to buy a home. No, that's not the case. That's definitely not the case, right? So if that is when we evaluate your credit score, if that's what's holding you back and that's what's impacting your score, there's tricks, there's ways that you could get these things cleared off of your credit report, increase your credit score, get approved, find a home, and close on a home loan still. They're there. Life happens. That's okay. That's ironic. What we need to do, though, is we need to identify those issues. What are the issues? And how do we resolve them, right?
Mhm.
So let's say life happens and you are late on a credit card over 30 days
Mhm.
and it's on your credit report. And that's what's negatively hurting your score. What are you just sorry out of luck you're not going to buy a home? No. You want a creditor, right? And you want to ask them, hey, listen, finesse them, kill them with kindness, be friendly but firm, and let them know, hey, this is what happened. I was late on this credit card. I've had this credit card open with you guys for 10 years. I've never been late on this credit card. It was a mishap. I just forgot about it. Is there a way that you could do a courtesy deletion of this late? Now, I'm not saying it happens every time. Absolutely not. But you have nothing to lose to call the creditor and charm them. And hopefully they're willing to work with you because they do have the ability to do it. I'm not saying they will, but they have the ability to remove that late from your credit report. And if they do, that late's off there. It's like it never existed and your scores increase. It's a similar process with collection accounts. So we talked about medical collections. Those are a breeze. You pay them, they're off. Have a medical collection. Or what if you get a non-medical collection on your credit report? Never going to buy a house. I got a collection on my credit report from AT&T. I didn't pay my bill. You call the collection company and you talk to them and you could settle for a less amount. You could pay it in full, right? But what's going to help you increase your credit score so you can be in that approval range of getting qualified for a loan? Similar to a late payment, you ask the representative at the creditor, at the collection company, if they're willing to do a removal upon payment. So, hey, I understand I owe you $795 for my AT&T collection. If I pay you this, would you be willing to remove or delete it from my credit report? Friendly but firm, kill them with kindness. And if they are willing and to work with you and to do that for you, it's the same thing. It helps your credit score. It's completely off your report. Like it doesn't exist. Charge-offs, there's a little bit of a twist on the charge-off. Charge-offs are tough to get deleted. I've been in the game 13 years, and I could probably count on both hands how many times I've seen a charge-off removed because that creditor is holding on to the debt. They're not letting it go, right? So I got a charge-off. I'm just never going to buy a home for the rest of my life? No. So what you need to do is think of a charge-off account, it reporting negative and derogatory and past due like we talked about. It's your arm and it's bleeding. It's blood's everywhere. I got to stop this from bleeding. So you call the original creditor who's holding the debt and they're like, hey, I got to pay this. And you pay them. It stops the bleeding. It's still on your credit report. You lift your arm, you're like, oh man, that cut's still there. It's still bleeding, right? But over time, what happens? I'm kind of holding that wound down, and I look at it after a month. Oh, it's healing up a little better. Another month. Oh man, 2 months gone by, and it looks a lot better. 3 months, it's barely there. 4 or 5 months. Oh, it's just a scar. It's stopped bleeding. It looks a lot better, right? That's how it works. So you pay that charge off, and over months of it not reporting negative, not reporting derogatory, not reporting past due, and now all of a sudden, that's not hurting your score anymore. It's helping it because that negative account isn't there. So that's another thing about derogatory accounts and how you can still work on your derogatory negative accounts to improve your credit score.
And these things are on. There are limitations to these things. So that collections and charge-offs have a limit. Late payments have a limit. Separate from those, public record items like judgments and stuff, they have a different limit for BKs, foreclosures, things like that. Mm-hmm. So when we get into the limits, what do they, if you're looking at buying a house and it's 6.5 years from the date this collection happened, what do you want to look at on the credit report to judge your date, and when does it come off? Both for judgments and the different aspects and how do they differ? That's a huge thing because they don't stay on forever. You don't touch them. What's that point where these things are just going to go away?
7 years is the magic number for collections, charge-offs, late payments account. The only thing, it's weird. I don't know why listen, sometimes I don't even know who wrote the rule book on credit, but the only thing that stays on your credit forever, student loans. Never will come off. I don't care if you have a student loan late from 30 years ago. It is always on your credit. Now, it's not impacting your credit score after that long, but it just stays on there. It's like, okay, I was a student, I didn't pay my student loan. This is super important. The date of last activity. So whenever is the last time you made a payment to that original creditor, if you're making payments to the collection company, that's when the shot clock starts once you make the payment. But if you're not making a payment to this collection company every single month, they're not resetting the shot clock. If you're not making a payment to that original creditor, it doesn't reset the shot clock, right? So it's 7 years from the date of last activity. And Chris, you brought up a point about it being like, what if you have a collection that's 6.5 years? What do you do with it? Mm-hmm. My professional opinion, you just leave it alone. Because if it's 6.5 years old, it's already seasoned, it's crusty, it's about to fall off in another 6 months. Don't open that can of worms, because you make the payment to them, you pay it off, reset the shot clock. So we don't want to do that.
Right?
It's 6.5 years, it's about to fall off in 6 months. There's other things on your credit report that the bureaus are evaluating. They're not evaluating that 6-year crusty thing. I promise you, they ain't even worried about that anymore. They move on to bigger and better things. They're worried about that late payment you had on your auto loan. They're not worried about that.
How about judgments, bankruptcies, those things, and the timeline for
those they hold on to a little bit longer. That's 10-year limit for judgments, tax liens, bankruptcies. Those things stay on your report for up to 10 years. But the same thing, as they get older, as they're weighed less and less on your credit score, right? Leave them alone.
So as long as I don't touch them, I should be fine.
Yeah.
All right, cool.
Leave them off limits.
You heard it you heard it here, people. As long as we don't touch them, let it go.
If they're that
just
old,
like Frozen, let it go.
Yeah, everything. So I think just to summarize what Abe was talking about, and this kind of falls under anything that's derogatory. If it's a collection, if it's a judgment, if it's a late payment, whatever it might be, the older these things are, the less it affects your score. So over time, these things are going to heal, just like the bleeding example Abe gave earlier. You cut yourself, is bleeding, you got to patch that thing up and let it heal. Anything negative that happens every month that goes by, the thing is better and better over time. And so the older it is, the better it is. So your credit will heal itself as long as when you have these late payments that are aged, and then you have more new late payments. That like Abe said earlier, it's all about your payment history. So if you start creating patterns and you start doing stuff like that, that's when those algorithms start to work against you big time, because now you're showing an old late payment, but you also were late again halfway through 2 years later, and then now you had 2 more late payments. So in general, if you keep your scores up, if you keep every debt you have paid on time, you make sure you keep low balances on your credit report by the time the credit cards report, you will have good scores. It's not necessarily just as easy as pay all your bills and you have good credit. That's not always the case. I had a doctor in Texas who made $1 million+ a year, and he got a cash advance on a Bank of America credit card for $140,000, and they gave it to him at 3% interest. He was like, I took everything they gave me. They gave it to me at 3%. Why wouldn't I take the whole thing? I said, well, I'm going to help you buy this next house, but I'm going to have to hit you with worse pricing because I know you make a lot of money. I know you pay all your bills, but your credit score is not good because everything else was good. But he had maxed out a Bank of America credit card for $140,000. They gave him the money at 3%. And I'm like, well, he's got it invested. He's making good money. I said, I'm glad you made more than the high rate's going to cost you because your mortgage is going to be impacted. So you can pay your bills on time, but if you mismanage your credit cards, that'll hurt you. So pay all your bills on time. Keep your credit card balances under 10% by the time they report that balance to the bureaus, like Abe was saying. And if you do all payments on time and you keep your balances below 10%, you will have good credit as a general rule. Abe and I have talked about a couple things. One of the things we talked about just today actually which was interesting to me, and I didn't know this even after 17 years. If you have a balance on your credit card over 50%, that's not the only thing that affects you. If you have a balance over 50%, every month that it reports over 50%, it hurts you more and more and more. It's not just like a one-time you're over 50%, so you get this hit. Every month that it's over 50%, it gets worse and worse and worse. Now the question comes up, Abe, what if I've been hit for 6 months and I've been over 50%, but I pay it to zero? Do I get all the points back?
I don't know if I'd be, I wish it was that easy. Unfortunately, it isn't that easy. So like you stated, Chris, we did talk just this morning. You called me, at a client, we looked at it, and it was crazy. And they're like, I didn't know that. I was like, I'm going to recruit, after this, I'm going to recruit Zay and Chris. They know so much about credit that I just was teaching them over the weeks. But to your question, Chris, and to your point, right? So every month it was over 50%, they're digging you, right? and then you pay it off. And remember, not pay it off. We're going to leave it. Look, can we leave a little something on it under 10% so we can maximize the points? If you lost 30, 40 points by it being 6 months, over 10% over time, you lost. You don't just get all those points back. Give you 5. Next month, under 10%, I'll give you 7. Under 10%, all right, I'll give you 8. Under 10%, I'm going to give you 5. So you earn those points back little by little by little, but you have to show them that you're financially responsible month over month. Remember how they evaluate your credit score? It's your report card. You're getting a report card every single month from the credit bureaus. It's not once a year. Every single month, you're getting a report card from the credit bureaus evaluating your credit score.
So, Abe, do you say that auto pay should be your best friend?
7 days before they report.
You know, that's a great question, Zay, and I'll say it yes and no. You never have to worry about the late. But auto pay, I learned this from my mother-in-law. Actually, my mother-in-law, she's like, hey, I got a Macy's card. Should I just put it on auto pay and things like that? I'm like, all right, let me break down credit for you. She's from overseas, so she didn't understand it. But that doesn't matter, right? So with auto pay, you don't have to worry about the lates. But with auto pay, there's only certain things that you could select. You could select minimum payment, which, hey, if you pay the minimum payment and your utilization is over 50%, that's not going to be that good, right? Or you could pay it in full, or I think you could pay the statement balance. Statement balance, paid in full, and minimum, right? So let's just say you put it on auto pay. You're going the safe route, which isn't a bad thing, right? You just have to make sure, just because your bill is due on that date, doesn't mean that's the day they're reporting to the bureaus. So find out when they're going to report, because I get clients all the time too, where it's like, I don't want to pay any interest. I'm not going to pay I'm paying my credit cards off to 0. I'm like, trying to get home, trying to maximize your points. So this is what I tell those clients, where I'm not going to get any interest. If you pay your credit card off to 0 or have it on auto pay where you pay it in full, literally tell them the next day, charge something on there, because depending on when that date reports, you need it to report with a balance, right? So you paid your credit card off in full, it was on auto pay, right? The next day, I'm telling you to go buy a sandwich, and sandwiches, they used to be like $3, $4 for a sandwich. It's like $12, $13 with inflation, right? So go get something, go get lunch, where there is a small balance that's still showing on that credit report. So the bureau say, ooh, there's some activity there. Zay's using his credit card. I like that. His utilization is low. I really like that. Here you go. Here's how many points you're going to earn from that.
I got 2 more things too. Whenever you're done, Zay, that I made sure that we get a ton of common questions. So I made sure we got a couple of these too. But if some other folks got some questions in the chat, let's address those.
No, I was just gonna jump in what Abe just said, because I feel like my professor was right at college. He was basically was like, hey, get a gas card and just use it for gas and then pay it down. And I was like, what you mean? He was like, watch, it's just going to boost your score over time. So when I graduated college, that was the first thing I did, was I just got a gas card. It wasn't too much. It was like only for $100, but he also told me that even when you're younger, you can start. I don't know, what's the earliest age you can start building your credit?
So we talked about the authorized user, right? And the authorized user account. Okay, I'm going to tell you one thing, and then I got to tell you a story. Chris, you got questions, but you can hold them because I got the awesome story. Right?
You always got stories.
Yeah, I do have a lot of
more analogies.
Exactly. So you could start building your credit at a very young age when you get added as an authorized user onto your parents' credit card. You could be 10, 11 years old, so you can't use the card because you're younger, but can get added as an authorized user and build up that credit. And then when you ever need to use that credit, now I'm 18, I want to get my own credit card. I'm going to buy my own car. Or heck, credit's like everywhere around us, right? You're going to look to rent an apartment, insurance rates, everything. Interest rates on a mortgage for a mortgage from Rocket, through Zay, all that good stuff, right? It's all revolved around credit. Right? So you could start building your credit at a super young age. You can't get your own credit card, but add it on a parent's or a family member or a friend that you trust. So there's like certain highlights in my career. I want to talk to you. So Zay, I don't know what your professor taught, maybe econ, I don't know, whatever it was. So there's certain highlights in my career that I love that like I'll remember for the rest of my life. And this is top 3. Yeah, top 3. Yeah, I'll give it. Top 3 highlights in my career here at Rocket Mortgage. So for the last 8 years, everyone, I've been actually going to high schools to teach this through Rocket Mortgage. And it's incredible. These are juniors and seniors that are getting ready for college. And I provide them a presentation in regards to credit. A lot of things that we talked about today: establishing credit, managing credit, building credit, myths about credit, all of this, all the different types of credit, what they're going to use credit for in the future, how when they apply for a job, they're going to be looking at their credit. So we talk about all this, and it's amazing. Like I walk out of there, these kids are like carrying me on their shoulders like I'm a king. Like I just walk out. The parents learn more than the kids because the parents didn't even know this, but these 16, 17, 18-year-old kids, they truly appreciate that information. I think it's so crucial, like you talked about, Zay, is that these young kids, when their entire lives are going to be based on what your credit looks like, that we get their credit in a great spot. And COVID hit, and then one year they had me do it virtual, and I like recorded it. I'm like, yeah, I'm never doing this again. If like you don't bring me back in person, I'm never recording this video stuff again. I love being in front of people, and especially those kids. It was awesome to teach them about credit, and it's so vital for their lives moving forward.
So many myths out there.
Oh my goodness,
Chris,
you know,
all the stuff that we hear. That was one of the things I was going to bring up. You know, one of the biggest things as a loan officer that we end up seeing is clients come in and they say, well, you know, listen, I'm just trying to figure out where I'm at. I don't know that I'm ready to buy yet. So I don't want to go, you know, through all this and have my credit pulled because I'm so concerned about, you know, my scores. And then we have to educate people and say, look, I mean, I hear where you're coming from. And way back when, things were done a little bit differently, but for decades now, credit checks have only affected your score a couple points for most people. The average is like 3 to 5 points, not much. Out of 850 possible points, if 4 or 5 is a problem, that should never be the deal breaker for you, you know, getting a mortgage or getting financing. And at the end of the day, if that credit check doesn't result in you acquiring any new debt, it may show up on the report for 12 months that your score was checked, but it doesn't affect your score that long. It's not going to, you're down another 3 points. You have a check, that's not, it doesn't do that for 12 months. That's not how it works. So that's one of the biggest myths that I deal with a lot. But from a credit pro, how do you do? Because you told me you always got the analogies, and you told me earlier, like, oh man, I do it that I got a great way to address that with people. And so I know how I do it. But you're the guy, man. So tell me your thoughts on that.
I love it. So what I always explain to clients when they have concerns about pulling their credit and it impacting this, I don't want you to pull my credit. My scores are going to decrease. You know, you got to first take a step back and you got to make sure you're comparing apples to apples. And so it's about education, right? And you educate the client of, hey, we want to make sure we're comparing apples to apples, not apples to steaks. I said that, apples to steaks. Because when they go online, they look at Credit Karma. Oh my God, you pulled my credit at Rocket Mortgage. My score dropped 15 points. Your mortgage company sucks. Wait a minute. Credit Karma is showing you a consumer credit report, which is a Vantage 3.0 score. There's 47 different scoring models, right? When you speak with a lender about getting a home loan, you have to make sure that you understand, we look at a FICO 2, 4, and 5 with all these different scoring models. If you put all these 49 different scoring model credit reports on this board, they all look the same. You know what the difference is? The algorithm. And if you're trying to get a home loan, this is what I'm going to use. This mathematical equation, here you go. And then you're trying to get an auto loan. So the same accounts are here, but instead of trying to get $100,000 on a home loan, you're trying to get tens of thousands of dollars for an auto loan. So I'm going to evaluate your score a little bit differently, right? So you want to make sure that you educate the clients, number one, on that, because they always say, oh, you pull my credit. I seen my score went down before. Right, but you have to make sure you're looking at this. I also like to educate my clients on this is, hey, listen, and it's exactly what you said, Chris. Like, you hit the nail on the head, right? If you're worried about me updating your credit report and your score dropping a couple points, that's a problem of you not qualifying for a loan. The way the credit bureaus evaluate your score is the information reporting. They're not basing your credit score. How many times do you have your credit score pulled? Oh, you had it pulled 10 times, so I'm going to give you a 400 credit score. No. They're evaluating on the information that is reporting your mortgage, your auto loan, your credit cards, all the debt that you have accrued. That's how they're evaluating your score, not on pulling your credit. Absolutely not. So that's another thing that I tell my clients as well when they're worried about pulling credit and is it going to hurt my score? It's going to hurt it a couple points. But if a couple points, if you're doing all the right things on your credit report, is it going to take you from not qualifying to qualifying for a mortgage? You work so hard, you pay your bills on time, utilization is low, you've had credit for so long. Why not show off that 700-800 credits? No, don't blow my credit. Let's show off that. Let me see what you can qualify for, that 750 credit score that you have. Look at this great interest rate you're getting. Look at these lesson costs that you're getting because all that hard work you did. You don't want me to pull your credit for 2 or 3 points? Come on.
Okay, so Abe, I need to break this down for me to help me understand. And one of the things that like actually helped me understand of like everything that you just said was that basically with credit, would you consider like credit is like a pool of water? If you have like a small pool of water, it calls in the pond, or if you have a big pond, like a big thing of like credit, like you have 20 years of credit, you're an authorized user. And let's say that little credit pool, you drop that pebble in the water, it's less ripples.
Yeah. That's kind of like my pillar analogy that Abe and I talked about. We were talking, and the one thing that I said is I like strong pillars on my credit report. So that's why I have that credit card we talked about that I've had since I was 18. I mean, since I could get a credit card, I went and got a credit card, and I'm 37 now, so that credit card's almost 20 years old. And I've had that same credit card, and I've never gotten rid of it because I'll refinance houses, I'll get new cars, I'll do other things with my credit. But one thing that I won't do is I'll never get rid of that credit card, and that's my pillar of strength on my credit report, right? So that's kind of addressing part of what Zay just said, but you can elaborate. But that's I tell everybody, find a card, make sure it has good rewards. If it does, don't dump it to go get the gas. If you're getting a couple % cash back, this new shiny credit card with it. Just get one that has no annual. Get one that gives you a couple % cash back on a lot of stuff. And just keep it. Just keep it. Roll with it. A lot of times, if you get it through your bank, like Chase, B of A, any one of the big guys, it's probably going to be a Visa, your MasterCard. It's a good card. It's accepted everywhere. You don't have to have 5 of them. Don't go open the new Saks Fifth Avenue credit card because they offered you 20% off. If they offer you 20%,
that's a terrible
investment. Credit card, they probably offer you 15 just because you ask. Hey, I can't get a credit card, but can you guys still hook me up since you're offering this? Best Buy will do it almost every time. Gardner White, Art Van, rest in peace, former, furniture store here in Michigan, right? But like these places, they got the store credit cards. Don't do that. Just have a pillar that you build in that one credit card that you keep forever. And then you don't have to worry as much about these little ticky-tacky things. One late payment on something else isn't going to affect you as much. Because you have this like it's your credit report. If you got 20 years of good payment history on a credit card, one late payment's not going to affect you the same as if you had 6 months of history and you got a late payment. It's not going to affect you.
Exactly. Yep.
Okay. Well, I mean, I don't think we can dive too much into credit without overwhelming too many people, and also without giving all our secrets away. We need them to give us a reason to call us, give them a reason to actually say, hey, let me dial the phone. Let me call Chris because I have a question. But I felt like we gave away too many gems, and which is not a bad thing because we're not gatekeeping over here. I feel like all this information is free information, and all this information coming from the right people is good information. So, Chris, if somebody wanted to, like, let's say they're not ready to get that mortgage and they're not ready to take that next step, but they do have questions for you, what would be the best way to get in contact with you and actually start that journey of home ownership? Even if it's not this year, but let's prepare for next year.
I mean, at the end of the day, a conversation's always a good thing, right? And so if somebody wants to reach me, I would just say, shoot me a quick email. It's very easy to get in touch. It's Chris Osterlund at rocketmortgage.com, CHRIS. The banner on the bottom's telling you OSTERLUND at rocketmortgage.com. It's super easy. You can also text me or call my direct office line, which is scrolling on the bottom too. But yeah, just reach out. We can always start the conversation. And at the end of the day, if we can create a plan to get you further along and get you ready, that's the goal, right? Just get you further along, get you ready to go, get a plan together. So that way, by the time you've made the decision, the variables, Now you're ready to start talking with Isaiah, the realtor, and start looking at what 200,000 will buy you, what 300,000 will buy you. And if it won't buy you what you want, where you're looking, then somebody like Isaiah, who's an expert in the areas, can say, hey, listen, Harrisburg might not be, the best place for you to find a house at that price. But knowing that schools for children are like a 10-year down the road thing, I got an area that may not have the greatest schools. They're not bad, but it has a little bit more flexibility on price. It's an up and coming area. You will see the area start to grow. It's already doing that. Now we can get you a house there for $150,000. Here you might not be able to do that, but over here you could do that. So now once you have your variables in place and you get to the point where you're ready to have that conversation, Isaiah can help you way better knowing that you have your variables, you know how much money you need, you're prepared. He can help direct you in the right spot.
So that means, people, that it's good to get a starter home at first. Even if you're not ready to buy your dream home, think about it like a starter home. Always take that step to say, hey, you know what? I cannot buy that dream home now, but what can I put myself in place credit-wise, financially, to get that starter home in the future? So, Abe, I know that people can't really directly text you or call you, but what's the best information? Like, if somebody wanted to just ask a credit question, I know your email is probably your best way for them to reach you.
Absolutely.
But I know they're not supposed to, Chris is supposed to connect you and stuff like that. But we might have people on the chat that might be looking for that.
Absolutely. Yep. So yeah, Chris would be like kind of the front line of defense, but my email, I'll share that with you, because if you have some general credit questions, or hey, you mentioned this one thing, or hey, I talked to this creditor and I wasn't sure. So I go by Abe, but it is Abraham. It's scrolling at the bottom, so I appreciate it. Zay, it's Abraham, Abraham. My last name Yehey, Yeihey, at rocketmortgage.com. You can reach out to me anytime. I have trouble sleeping. I don't really sleep at night. I do a lot of energy drinks and things like that. I go to the gym super late. Chris knows about that. So my blood would be pumping late. So I'll be up till 1, 2, 3 in the morning. So you have any questions, you can email me anytime, and I'd love to help you out, because, Zay and Chris, you talked about it, and I would say we want to be proactive instead of reactive, right? So if you're not
100%.
looking to purchase right now, right, for whatever reason, it could be a number of different reasons, why not get in touch with Chris and get an idea of what you qualify for? And hey, if you need credit help, I'm here, right? And then after you have an idea, get in touch with Zay and have him start. You never know when your dream home is going to hit the market. You really don't. You know what I mean? I talk to clients all the time. They're like, hey, I'm about 6 months out. I'm like, okay. So you're telling me if you found your dream home in the right location at the right price, you're not looking to transact to me? They're like, oh, yeah, that's exactly. So you know what? I was thinking like Willy Wonka, right? And it's like you want to get that approval letter from Chris so you could take that Willy Wonka ticket to Zay and be like, Zay, I'm not some phony out here. I got verified approval from Rocket Mortgage. Let's get down to business. And that's
100%.
how it works as well. So we need to be proactive on that.
100%. So there you have it, folks. This is going to be real quick. Yes, we're going to have these happy hours more consistently, because we understand that right now it's more about the information time. And you can never, ever have too much information, especially when buying and selling and even going through the process called life. It's never enough information out there that you cannot grasp and contain, because, like I said, this right here is just a stepping stone to get into that right step to buy that dream home that you want. So for those of you that have joined the live, have watched the video, I really appreciate your time today. If you want to get in contact with me or reach out to me and ask me about any questions regarding real estate, credit, Rocket Mortgage, lending, doesn't matter. If it's real estate related, I have the answers for you. Or if I don't have the answers, Chris has the answer for you. I will get you set up. So in the top left corner, there is a QR code that you can scan and sign up just to make sure people know that you're here. And if you want one of us to reach out to you, we can do that as well. There is also my information loaded at the bottom, which is my phone number, which is 717-319-9635. Feel free to text me. I might not answer, but I will get to you as soon as possible. And if you want, you can also email me at isaiahtherealtor@gmail.com. So thanks for watching. Thanks for tuning in. And please do not be shy with the questions and answers. We can still answer them later. And we're out. Talk to you later.